Right now, someone's lying awake in a Sydney bedroom wondering how they'll afford next month's rent. Someone else just backed their eighth property investment. And the crazy thing, they're both looking at exactly the same Australian rental market, same country, same economy, completely different realities. In the next 15 minutes, I'm going to show you why. My name is Aaron, and I help everyday Australians build wealth through property investing. And one of the biggest conversations I have with people right now is actually about the rental market, because there's this narrative that's gripping the country. On one side, there's this idea that Australia's in a rental crisis, rental unaffordability, prices skyrocketing, families struggling, and that's real. That's absolutely real. But on the other side, I'm talking to investors who are making more money from the rental properties right now than they ever have before. Yields are climbing, tenant demand is through the roof, vacancy rates are at historic lows, and their capital growth is accelerating. So, which is it? Is it Australia experiencing a housing crisis, or is it the greatest opportunity for wealth creation we've ever seen? And the answer is both. And that's what we're diving in today. See, I used to think that these two were separate conversations. The crisis is real for renters. The opportunity is also real for investors. But what I've realized is that they're not separate at all. They're actually the same phenomenon. They're just the same market seen from two completely different angles. And once you understand this, once you know how these two realities exist simultaneously, everything changes about how you think about property, wealth, and Australia's future. So let me show you the data first. Let's start with the hard facts. Australia's rental market is in genuine crisis. This is not hyperbole. This is not media scaremongering. This is data. In the last 5 years alone, just 5 years, median rents have increased by 53%. 53%. Think about that. If you're renting a house for $400 a week in 2020, that same house is now costing you roughly $612 per week. That's an extra $212 a week you didn't have 5 years ago. Now, here's where it gets scary. In the most recent data from Q3 of 2025, Australian renters are now spending an average of 34.1% of their household income on rent. Think about that for a second. 1/3, your entire monthly paycheck, 1/3 of it just goes to keeping a roof over your head. The target, according to housing researchers, is 30%. Anything above that is considered housing stress, and we're now at 34.1% nationally. That means the average Australian renter is in housing stress, not the bottom 10%, the average renter. But it gets worse when you look at the specific cities. In Perth, Perth has gone absolutely wild. Rents there now take up 32% of average household income. That's up from 21% in 2020. In just 5 years, Perth went from fairly affordable to less affordable than Sydney. Let me say that again. Perth went from one of Australia's most affordable capitals to now being less affordable than Sydney. That's extraordinary. And Sydney itself, 30% of average income. That means a full-time worker in Sydney earning $70,000 a year is spending $21,000 a year on rent. And that's just the average. For hospitality workers, it's 42% of the income. For single parents working full-time, that's 33%. For people on job seeker, 131%. They just plain right cannot afford housing. It's mathematically impossible without government assistance. And it's not just the capital cities. Regional areas have also deteriorated. Orange, Dubbo, Tamworth, places that were affordable, genuinely affordable in 2019, are now moderately unaffordable. Someone in Bega has seen their rent increase by $150 per week since 2018. 150. The vacancy rate nationally sits at 1.2%. That means if you want to rent something, there's virtually nothing available. For every 100 rental properties, there's only one available. Brisbane, 1% vacancy. Perth, 0%. If you've got money and you need a rental, you better be ready to act immediately because competition is vicious. Now, the Salvation Army did research earlier this year. They surveyed how low-income households, 71% of them said they were in housing stress. 33% said they were worried about being homeless. 19% have already experienced homelessness or had to sleep in their car in the past 12 months. And here's something that really hit me. Anglicare Australia looked at rental listings nationwide. They applied a very simple standard: affordability for a family of four, both parents working full time at minimum wage. Out of all rental properties listed in Australia, only 13.4% were affordable for that family. For a single parent with one child on the parenting payment, 0.1% of properties were affordable. 0.1. That's not a problem. That's systematic. So yes, the rental crisis is absolutely real. Renters are genuinely struggling. Homelessness is rising. Essential workers, firefighters, teachers, nurses, they can only afford less than 4% of the rental properties that are available. That's the state of the market today. Now, let's talk what's happening on the other side. But here's the thing that nobody's connecting. While renters are drowning in this crisis, investors are thriving. And that's not an accident. It's the same market dynamic that's crushing renters, that's creating wealth for investors. Let me break down the investor side for this. Rental yields across Australia are at levels most investors have never seen before. National vacancy is 1.2%. In a normal market, healthy rental market has about 3% vacancy. That's when supply and demand are balanced, when tenants have options, when rents are sustainable. At 1.2% vacancy, there's almost no supply. Tenants have nowhere else to go. What happens when demand is high and supply is low? Rents go up. And investors who own property in these markets are seeing double-digit rental growth annually. Darwin is yielding 6.6% gross. That means if you bought a property for $500,000, you're collecting $33,000 per year in rent. Not bad, right? Units in Darwin are yielding 7.8%, Hobart 4.4%, Perth 4.3%. These are yields that 5 years ago you'd only find in regional towns. And that's just the yield, the income return. On top of that, investors are getting capital growth. Brisbane properties are up 8.8% this year. Perth's up 7.5%. Regional markets like Geraldton are posting 7.4% growth. That's 8% per year on capital, plus 3 to 4% per year in rental income. That's wealth creation at 11 to 12% per year, compounding annually. Now, here's what's actually genius about this from an investor perspective. Population is flowing into Australia like never before. Net overseas migration is at record levels. All those people need to live somewhere. Most of them can't afford to buy. So where do they live? Rental properties. The place an investor owns. More migrants equal more renters. More renters equal higher demand. Higher demand equals higher rents and lower vacancies. Lower vacancies equal stronger yields. You see how this compounds? The government just expanded the home guarantee scheme. First home buyers can now get into the market with 5% deposits instead of 20. But most of them are buying new builds, or they're buying in hot markets. They're not competing in middle markets. Rental properties where smart investors are playing. So the rental market just got even tighter. Strategic investors are now picking up suburbs where fundamentals are screaming opportunity. Dubbo's posting solid yields with sub 1% vacancy. Tamworth, similar story. Ballarat, Bendigo, Geelong, solid regional markets with reliable income and healthy capital growth. Let me give you a specific example. A property investor in Perth bought a house in a growth suburb for $550,000 in 2020. At the time, it was yielding about 3%. Rents were rising, but not dramatically. 5 years later, that property is now worth roughly $740,000. That's 34% capital growth. And because of the rental crisis and tight vacancy, that same property is now renting for about $550 per week instead of $300 it was in 2020. That changed the yield from 3.1% to 4.7%. So the investor has made $190,000 in capital growth, collected a regular income that's increased substantially, and an asset that continues to generate cash flow every single month while appreciating in value. Meanwhile, a renter who was looking at the same property in 2020 would have had to pay $150 per week more. Today, that same property is costing them $550. That's a $394 per week difference. And if they'd somehow bought it with their deposit, they'd own an asset up $94,000 after the mortgage. But they're renting, so they're paying more, owning nothing and getting further behind. This is the split. This is what is actually happening. Now, here's the thing that everybody gets wrong about the situation. People think the rental crisis and the investor opportunity are two separate problems. They need two separate solutions. They think landlords being greedy. They think the government is asleep at the wheel. They think it's a simple supply problem. And there is definitely a supply problem. There's not enough housing in Australia. That's real. But that's not the whole story. The real issue is the system has created a dynamic where investing in property, i.e., owning rental properties, is genuinely one of the safest wealth building mechanisms available in Australia. And because it's so safe, because the returns are so reliable, wealthy people and investors have poured money into it. Think about it. If you're someone with a bit of capital, where are you going to put it in Australia in 2025? The stock market, fairly volatile. You saw what happened during COVID-19. Your portfolio can swing 20, 30% in 1 year. Bonds, interest rates are falling, which means bond values are much less attractive, but yields are modest. Business, risky. Most businesses fail in the first 5 years. And property, which is backed by land, which Australia has a lot of, tax advantages, negative gearing, depreciation, the ability to leverage, and most importantly, it's backed by human necessity. People need a place to live. That's not going away. So smart money flows into property. Mum and dad investors with $200,000 to invest into property. Superannuation funds increasingly investing in rental property and developments. International investors, they see Australia's property market as incredibly stable and they're buying. All that capital flowing into property does what? It drives prices up. Investors bid up the market. The entry point for a house keeps rising. Young people, first-time buyers, they can't compete with investors, so they keep renting. And as they stay renting, the rental market stays strong. Rents keep rising, which makes the yield on rental properties more attractive, which in turn brings more investor money, which drives the prices further up, which then forces more people to rent. You see how this is a cycle? Now, add this to the net overseas migration. 185,000 net arrivals last year alone. All of them need housing. Most of them are moving to capital cities, especially in Melbourne and Sydney. Where's the rental stock to house them? There isn't enough. So rents spiral upwards. The government tries to address the crisis with first home buyer schemes, but those schemes help people buy. They don't address the fundamental imbalance. In fact, they push prices even further. Investors see these pressure points and they keep buying. Why? Because the fundamentals are working in their favor. High migration, tight vacancy, rising rents, government policies that favor ownership over renting, tax advantages for property ownership. It all compounds. And the people who lose in the system are renters. Young people trying to save a deposit while rents consume a third of their income. Essential workers, single parents, anyone without existing property wealth. So the question isn't really, are we in a crisis or is it an opportunity? The question is, under the current system, the crisis for renters is the opportunity for investors. They're the same thing. The conditions that squeeze renters are the exact conditions that create wealth for investors. Now, I could end the video here with a depressing take on inequality and how the system favors the wealthy, but that's not the point I'm trying to make, okay? The point is, this situation exists. It's real. And once you see it clearly, you have to make a choice. You can sit on the sidelines and complain about how unfair the system is, or you can understand the system and work within it to build wealth. Because here's the reality. If you don't own property in Australia in 2025, you're swimming against the current. The system is structured to reward property owners. The tax system, the leverage available, the capital growth, the cash flow, all of it favors ownership. And if you're renting, you are not building wealth. You're not building equity. You're paying someone else's mortgage while their property appreciates and they're collecting tax deductions. Now, I'm not saying everyone should go out and buy 10 properties tomorrow. That's not the message. What I am saying is the rental crisis exists because the investor opportunity exists. And if you're on the renting side of this equation, you need to understand that. Some people will say, this is unfair. The system is broken. And you know what? They're right. But the system isn't changing tomorrow. In the meantime, people are building wealth through property while others are staying renting and falling further behind. The choice is actually pretty straightforward once you see it clearly. Either you understand this dynamic and find a way to become part of the solution side of it, to build wealth through property, however that looks in your situation, or you stay on the side getting squeezed by it. There are people out there who are making this work on even modest incomes. first home buyers who got into the market despite the challenges, investors who started with one property and built portfolios, people who understood the dynamic and executed a strategy. And there are people who are still renting, still waiting for the perfect moment, still hoping the government will fix the problem without taking action themselves. The rental crisis is real. The investor opportunity is also real. Both exist in the same market. The difference between thriving and surviving in this market comes down to understanding this dynamic and then deciding what you are going to do about it. Let me paint two scenarios for you, not to be depressing, just to make a point. So scenario one, it's 2035. A renter has been in the same situation for 10 years. They paid out nearly $450,000 in rent. They own nothing. Rents have continued to rise, now at 200% of where they first started. They're 35% of their income. They're stressed, they're exhausted. They're nowhere closer to owning. Meanwhile, the investor who bought a property in Perth for $550,000 in 2020, they now own multiple properties. Their portfolio is worth roughly $3.5 million. They're collecting $250,000 per year in rental income. They're leveraging that asset base to refinance, buy more property, expand their wealth. They're potentially semi-retired, or they're using this income to fund the lifestyle they want. The person renting is in the same position, maybe even worse. The person investing is light years ahead. Both people made choices. Both people lived in the same market, same rental prices, same property prices, same interest rates, but different outcomes. Now, scenario number two, it's 2035 again, but this time, the renter decided enough was enough. They tightened their belts. They saved aggressively. They managed to scrape together a deposit, and they bought up their first property. Maybe it took them 3 extra years of sacrifice. Maybe they had to downsize, had to move to a regional area. They had to make the tough calls based on their situation, but they bought something. Fast forward 10 years, that property has appreciated. They've now got equity. They've got income. They're not wealthy like the investor with 10 properties, but they're not drowning in rent either. They own something. That property is building wealth for them. Their equity has increased. If they needed to, they could refinance and buy another property. They're on the wealth building track. The difference between renting for 15 years and buying in year 3, potentially 500,000 or more in net worth difference. That's not small. So the question for you is, are you going to be someone who's still renting in 2035, still complaining about the system? Or are you going to be someone who's bought one property and is building slowly? Or are you going to be someone who really understood this dynamic and you are building an actual portfolio? The system isn't changing tomorrow, but your life can. Your choices today determine where you are in 10 years' time. So before I wrap up, I want to hear from you. Obviously, this is a sensitive topic. People have different views on it. Some people are going to watch it and think, this is exploitation of renters. Other people are going to think, this is exactly right. I want to build wealth through property. And that's okay. Both perspectives are valid. But I want to know, where are you in this situation? Are you currently renting? Are you trying to get into the property market? Are you already investing? What's your biggest barrier? Is it capital? Is it knowledge? Is it confidence? Drop a comment below. And if this resonated with you, if you found value in seeing the market from this perspective, please like the video and hit subscribe if you haven't already. Because every week we're breaking down the Australian property market, the investment strategies that actually work, the suburbs that are about to boom, and the psychology of successful investors. If you want to stay ahead of the curve on Australian property, subscribe right now and turn on notifications. Thank you for watching.